Guest of honor, Mr. Ibrahim Al-Mahri, Head of Islamic Banking, Mashrak Bank. Guest of honor, Mr. Mohammad Al-Ali, Managing Director and Head of Cash Management, First Abu Dhabi Bank. Guest of honor, Mr. Nishant Ranjan, CEO, GCC Operations, Bank of Baroda. Speaker, Mr. Dheeraj Kumar, Managing Director, Business Banking, RAC Bank. Speaker, Mr. Kumar Muthia, Divisional Head, Abu Dhabi Commercial Bank. Chairman C.A. Sundar Nurani, Vice Chairman C.A. Anurag Chaturvedi, Galaxy of Past Chairman, invited guests, sponsors, my colleagues in the Managing Committee, and respected members of the chapter. A very good evening and namaskar to all of you. I, Harikishan Rankawat, Secretary of the ICI Dubai chapter, warmly welcome each one of you to our banking summit. Now I request Chairman C.A. Sundar Nurani to welcome our guest of honor, Mr. Ibrahim Al-Mahri, by presenting bouquet and escort him on the dais. I request our chairman once again to welcome our guest of honor, Mr. Mohammad Al-Ali, by presenting a bouquet and escorting on the dais. Now I request Vice Chairman Sri Anurag Chaturvedi to welcome our guest of honor, Mr. Nishant Ranjan, by presenting a bouquet and escort him on the dais. Now I request our Treasurer, C.A. Manoj Agarwal, to welcome our Speaker, Mr. Dheeraj Kumar, by presenting a bouquet and escort him on the dais. Now I request ExCom member C.A. Priyanka Gupta to welcome our Speaker, Mr. Kumar Muthia, by presenting a bouquet and escort him on the dais, please. Now I request all of you to arise for the national anthem of UAE and India, to be followed by the motto of ICI.
जनगण मन अधिनायक जय हे भारत भाग्य विधाता पंजाब सिंध गुजरात मराठा द्राविड उत्कल बंगा विंध्य हिमाचल यमुना गंगा उच्चल जलधि तरंगा तव शुभ नामे जागे तव शुभ आशीष मांगे गाहे तव जय गाथा जन गण मंगलदायक जय हे भारत भाग्य विधाता जय हे जय हे जय हे जय 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 हे
य एष सुप्तेषु जाग्रति य एष सुप्तेषु जाग्रति कामं 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 तद्ब्रह्मा तद्ब्रह्मा तदेवामृतमुच्यते तस्मिन् लोकः शतः सर्वे तदूनात्यपि कश्चन एतद्वैता 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 एतद्वैता.
Thank you. Please be seated. Ladies and gentlemen, we all know that access to funding is easy for big companies, but banks are a bit hesitant when it comes to SME lending. But banks cannot afford to ignore small businesses, considering the significant role they play in the economy. According to Ministry of Economy, SME sector represents more than 94% of the total number of companies in UAE and provide jobs for more than 86% of the private sector's workforce. So it's very important for the UAE government, licensing authorities, regulators, and banks to support SMEs as they are the backbone of UAE economy. Our expert speakers will let us know the reasons why SME lending is so difficult and what can be done to access SME funding with ease. They will also discuss about the corporate banking and digital solutions as well. Now I would like to thank our sponsors who have always supported us, our principal sponsors, Tele, Lulu, IFCO, and Danube Home, our platinum sponsors, UHY James and HLB Hempt. I also thank our media partner, Khalij Times, institutional partner, Delhi Private School, and banking partner, Bank of Baroda. Ladies and gentlemen, there is one good news. Our platinum sponsor, HLB Hempt, has agreed to sponsor raffle draw Apple iPhone. So you need to drop your business card on their table. Can we have a big round of applause for our sponsors? I would like to place our special thanks to our guest of honors and learned speakers for taking the time out of their busy schedule for attending this banking summit and addressing us. And I also welcome each one of you once again. Thank you. Ladies and gentlemen, with this, now I would like to hand over to our Chairman CS Sundar Nurani to deliver his welcome address.
Thank you, CA Harikishan. Our guest of honors today, Mr. Ibrahim Al-Mehri, Mr. Mohammad Al-Ali, Mr. Nishant Ranjan. Guest speakers, Mr. Dheeraj Kumar, Mr. Kumar Mutaya, our Galaxy of Past Chairman, ICA Dubai Chapter Vice Chairman C. Anurag Chaturvedi, members of the chapter, my colleagues in the Managing Committee, invited guests, our sponsors and their representatives from the media, ladies and gentlemen, a very good evening to all of you. This Managing Committee will be completing 6 months of its tenure end of this month, and today is the third physical meeting we are having under this committee. I am very happy to note the progress we have made in having face-to-face meetings, and today's attendance of full house demonstrates the faith we have in each other in returning, of course, duly following the COVID-19 protocols. Very soon, on October 14th or 15th, we will have our Navaratri Diwali social event, which will be the first social event with the members and their families happening after 936 days or 78 months since we had our last social event on March 23, 2019. EXCOM is preparing for this wonderful experience, and please do mark your diaries for this majestic grand family get-together of ICA Dubai chapter. UAE's banking system has a great history. The first bank, Imperial Bank, was opened on October 14, 1946, which was followed by the Standard Chartered Bank in Sharjah in 1958. Rapid progress followed then onwards with the launching of the National Bank of Dubai, now ENBD, in 1963, which was followed by the National Bank of Abu Dhabi, now FAB, founded in 1968. The official currency, the UAE dirham, was issued on May 19, 1973. The regulator of all the banks, that is the Central Bank of UAE, was established on 11 December 1980. Our banking partner, Bank of Baroda, celebrated its 114th Foundation Day on July 20, 2021. It was established in 1908 in Mumbai and marked 48 years of glorious banking presence in the United Arab Emirates. Please join me with a round of applause for thanking our banking partner for their support to the chapter. Thank you, sir. Some of the major consolidations which happened in the banking sector includes merger of National Bank of Dubai with Emirates Bank International on March 6, 2007 to form Emirates NBD. Another consolidation followed was formation of FAB, First Abu Dhabi Bank, with merger between First Gulf Bank and National Bank of Abu Dhabi. The last consolidation happened during the 2019 pre-COVID, pre-pandemic was the creation of ADCB Group with the merger of ADCB, UNB and Al Hilal Bank. As you all might have read from Moody's report, profits of large UAE banks rose during the first 6 months of 2021 after a modest improvement in the operating environment led to the lower loan loss provisions. Data compiled by Moody's showed the largest 4 UAE banks such as FAB, ENBD, ADCB and DAB, accounting for 77% of UAE banking assets, reported a combined net profit of $4 billion for the first half of 2021, up 17% compared with the same period last year. The main reason for this is lower provisioning as the economy recovered from the impact of the pandemic. UAE's largest targeted economic support scheme, TESS, the Central Bank had announced $256 billion economic stimulus following the COVID-19 outbreak. This included a liquidity relief tool of $50 billion offered through banks to eligible customers who wish to apply for a loan deferment. 15% of UAE's bank's loan portfolio had benefited from the TESS deferral program. All of us in this room play significant role towards the banking system in UAE, either as entrepreneurs, as borrowers, or handling the banking activities of the organizations as CFOs, finance controllers, managers, or as auditors by auditing the financial statements prepared by the organizations which are duly considered by the bankers as one of the criteria for credit review. Let us listen from our guest of honors and guest speakers as to what are the expectations of the bankers and what is the future of outlook of the banking in the United Arab Emirates. Now let me brief you about events planned in October. On October 1, we are planning to have Multiply Wealth with a Healthy Heart. And on October 2nd, on the occasion of Gandhi Jayanti, we are going to have the quiz competition, which will be attended by the children of the members of the Dubai chapter. On 14th or 15th, as I mentioned, we will have the Diwali Navratra social get-together. On October 23rd, we will have CFO's conclave, which will be an in-person event. This, we hope, will be at Expo 2020 on-site. We will have CFOs from UAE sharing their experience with us, and speakers so far confirmed include CA Pramod Kumar Chand, CA Neeraj Agarwal, CA John Joseph, CA Thomas Carrier. Before I sign off, on behalf of the members of the chapter, our deep gratitude and sincere appreciation to our guest of honors, Mr. Ibrahim Al-Memri, Mr. Mohammad Al-Ali, Mr. Nishant Ranjan, our guest speakers, Mr. Dheeraj Kumar and Mr. Kumar Mutaya, who despite their busy schedule are attending today's event for sharing their knowledge and insights about the banking in UAE. Stay safe and stay blessed. Thank you. We have some spaces in the front side also. Maybe you all can come front side, if you don't mind. There are some spaces here. Over to you, Harikishan.
Ladies and gentlemen, now our guest of honor, Mr. Ibrahim Al-Mahri, will address all of us. But before that, I would like to invite our Vice Chairman, CA Anurag Chaturvedi, to introduce Mr. Ibrahim Al-Mehri.
Guest of honor today's event, Chairman C.A. Sundar Nurani, my colleagues in the managing committee, learned speakers of the day, members, good evening to all of you. I could not hear the Josh because this is the place where we had an event in 2019 and the same place we are meeting, so there should be a Josh. Thank you, thank you. So before we begin and before I introduce our chief honorable guest of honor, I would like to ask all of you that how many of you has read today's Khaleej Times? Only few hands I can see. We all are financial people, so we definitely need to keep apprised ourselves on the financial news. And I'm asking this question because there's a very important thing I want to share here. So not many people have read the Khaleej Times this morning, but in today's paper, the very important news was there. That what is the total debt today world has. Today is a historic day because today the world has crossed 300 trillion US dollars debt. Now this moment, you can understand that how critical role the banking and financial institution play in terms of setting up the economies itself. 300 trillion. And this reflects the importance of banking in today's business because unicorn making is in hand of the financial institutions. And abilities to impress the financial institution using the business model lies in hands of the business. Today's event, the learned speakers will share their insight to SME banking, corporate banking, and landscape in the UAE. And it's your chance to embrace your learning from the experience of our speakers and shape your business right by having the right options in front of you. Because many times what happens, we have options, but we are not able to utilize them in the time when we required. So speakers today, the galaxy of the speakers, they carry huge amount of experience in terms of banking. So utilize your options. Ask relevant questions, my friend. Ask relevant questions because this opportunities today is there, maybe tomorrow is not there. So essentially, I would like to urge each one of you to ask the questions. And now I would like to introduce our guest of honor, Mr. Ibrahim Al-Mehri, is the CEO of Mashriq Al-Islami Finance Company and head of Islamic banking. He has over 140 direct reported to him in retail, commercial, and international banking. So he handled a very large portfolio of the bank. Mr. Ibrahim's key responsibilities are to drive Islamic strategy across the corporate, retail, and international banking, manage Islamic acquisition across the group, managing products, audit, compliance, sales, operations, marketing, risk, and banking regulation, implement higher standard of Sharia authority and central bank regulation related to the business and Islamic digital implementation. He was a unit head, commercial banking of Al Masraf, Arab Bank for Investment and Foreign Trade, Dubai. He also managed sales of trade working capital products, sales of liabilities, propositions, while managing the branch services of commercial client. He was also Director SME of National Bank of Abu Dhabi, Dubai, UAE, ABP Product Head Assets SME of Abu Dhabi Commercial Bank, Dubai, and Assistant Vice President Product Manager of Mashriq Bank, Dubai, UAE. Can we have a big round of applause to welcome our guest of honor today?
Good evening. That was a long introduction. Sorry for that. So I would like first to thank Mr. Dheeraj Kumar, the Managing Director for RAK Bank, and Mr. Sundar Nurani, the Chairman of the Institute of Chartered Accountants of India, for inviting me to this prestigious and honorable forum. You know, I was surprised when I got the call from Dheeraj. I was wondering, I mean, do not get me wrong, you know, I was not sure about this institute. So I said that let me just have a look and just understand, you know, what is that institute? When I've read about it, the history for the past 72 years, I was surprised, with the things that this forum has done, I would say for India and for this country. So yes, I am honored to be part as, I guess, a speaker here. So I don't have any speech, I don't have any item to discuss, but I would like to leave the forum with a couple of points which I would love to know or pick up your brain on those things. See, I've been in the banking industry for the past 19 years. During that time when I started in the banking industry, we have started with a very traditional walking branch process, right? Where if anyone was interested to open an account or to know about the products, apply for a loan, he would walk into a branch, he will wait in the queue, or she will wait in the queue to apply for that facility, inquire about the product, not sure about all the operation work, how it will work, what he's interested about the loan, and what is the interest that he will pay, and all of that. After this huge, after this journey, and with whatever that the country or the world has faced in terms of the COVID impact, people nowadays are sitting at home in the middle of the night, just opening their phone and opening an account within 5 minutes, and they will get their account number in no time. This rapid change, which has really, I would say, accelerated during the last 3 years due to this COVID situation, has shifted the whole thought process about banking. If you think about the new way of doing banking, the new way of how the SME has come up, you have heard about the firms which have been not known in the world, not known in the list of top companies in this region or the world itself, has evolved and come up the curve because of the opportunity that they have grabbed in during this COVID situation. If you'll ask yourself, and I am one of them, banks nowadays, if you'll hear about them, they're moving away from traditional banking. They're investing into codes, algorithm, bringing engineers to develop platforms. They're investing a lot in terms of their customer experience rather than pushing just sales, traditional sales, paperwork, and pushing the papers and doing the numbers. Some banks, what I've heard is that nowadays they have embraced that the new life of working from home, and thinking that why should have offices? Why should work from this expensive country? Why should not have my operation in those cheaper countries? Don't get me wrong, I'm not disputing or doing anything, but from a cost perspective, from a banking industry, going to those cheaper countries will be more operational for them in terms of pushing the regular traditional banking. People should ask themselves, now it is the time to think about adding to their experience, because 5 years, 10 years from now, I don't think that professional, I would say like me at least, will not be needed to run banks, right? The new way of doing banking will be totally different. You will be talking to some technological geeks, who nerds, talks about how the algorithms are being made and how they are approaching the customers and how they are making their money. So I would urge, including myself, yes, to look into this new era of doing things, how it will evolve your skill set, how you'll be able to manage the new way of doing banking. I'm talking from a banking perspective. And embrace that change and move forward. If we'll talk also about, I would say, since it has been picked up about the SME, and this event is about the SME banking. The country has invested a lot in terms of bringing up a couple of funds, couple of billions, to invest in SME. SME has been always the backbone for any country to grow, where it has, or where it will open opportunities, for employment. It will open opportunities for new cash flow in the country. It will support the government in terms of the operation of doing things. It will shape up the mindset also of the people, where I would say from as a UAE national, having that concept of having my own business and running that has been a bit difficult in the past, for 20, 25 years earlier. But nowadays, can you imagine that the country has come up with these initiatives where they're allowing individuals to leave their work and give them 6 months to 1 year of a time to build up their new SME a new company where it will be considered under the SME umbrella. So, the whole shape of the whole direction of the country has totally changed to support that in the UAE. And without any further ado, I just said that let me just share a couple of thoughts and then I'll leave it to you to think about it. Thank you.
Thank you very much, Mr. Ibrahim Al-Mahri, for your kind words. Now I request our Chairman C.A. Sundar Nurani and Vice Chairman C. Anurag Chaturvedi to present a memento to Mr. Ibrahim Al-Mahri on behalf of the ICI Dubai chapter as a token of appreciation. Thank you very much once again, Sarji. Ladies and gentlemen, now our guest of honor, Mr. Mohammed Al-Ali, will address all of us. And to introduce him, I would like to invite our treasurer, C.A. Manoj Agarwal.
Thank you, Mr. Ibrahim, to take us through the real-life examples. Good evening, ladies and gentlemen, and honorable guests. When we studied in grade 1, 2, maybe your KG 1, 2, we had that B for ball, B for bet. When 10th, 11th, or earlier than that, we came to know B for bank also. But today we have somebody with us, for him, B for bank and B for bodybuilding. Have you ever heard about that? B for bodybuilding. Someone said that business and life are like a bank account, wherein you can't take out more than you put in. Today we have with us someone special, someone who proved that you can take out more than your investment, be it in bank or in personal life. We have with us the first place holder of Mr. Asian Championship, a member of UAE Bodybuilding and Physique Federation, a certified human resource professional, a certified Six Sigma black belt and a banker. Our guest of honor, Mr. Mohammed Al-Ali. Managing Director and Head of Cash Management, Corporate and Institutional Banking of First Abu Dhabi Bank. In his 24 years of banking career, Al-Ali has worked in multiple local and international financial institutions such as ADCB, SCB, UNB, and NBD, with diversified experience in financial analysis, consumer banking, credit risk, assets and liabilities management, and transaction banking services. Al-Ali holds an MBA from Strathclyde University, UK, and Master in International Business Law from Bournemouth University, UK. To get some interesting tips on banking with bodybuilding, let us welcome, with a big round of applause, Mr. Mohammed Al-Ali.
Good evening, ladies and gentlemen. Wow, it's a beautiful view from here, honestly. Assalamu alaikum wa rahmatullah. First of all, I would like to thank Mr. Sundar for inviting me here, and I would like also personally to thank my brother, Mr. Abbas Mirza, for introducing me to such a talented people here. First of all, thank you for introduction. You know, it's a beautiful introduction. Thank you very much. I really appreciate that. Today, actually, I lost the way to come here. And Mr. Sundar told me it's Hyatt Hotel, which is close to Media City. I never come here before. I was going to Hyatt, and then I realized there are so many Hyatt here in Dubai. Hyatt Regency, Hyatt Park, and Hyatt Park Golf, and here I was confused. And I went there. And my friend, Mr. Abbas, called me. He said, "Where are you?" I said, "I'm in the lobby." He said, "I'm in the lobby too." I end up to see, the moment I enter the lobby, I end up to see a dynamic young actor called Vivek Oberoi. So he saw me and I saw him. I knew him. I watch Indian movies a lot. If you can ask Dheeraj and you can ask Ibrahim. They know that I love to watch Indian movies. So I saw him. I said, as a respect, the guy, he's an actor. I don't mind to say, just to go. He had 2 bodyguards, huge. I said, "Can I have an honor to take a picture?" He looked at me and said, "It's my honor. I want to take a picture with you. You must be a bodybuilder." I said, "Oh my God, everybody's looking at a bodybuilder now." I said, "Yes." So he hugged me, take a picture with me. He said, "Where did you train?" I said, "And I want you to train me." An actor asking me to train him. I said, "It's my pleasure, whatever you want." So we exchanged the number. He asked me about my Instagram. He said, "Did you like?" So I told him about the story of Mr. Asia, dedication, and like this. He said, "I have a movie, and that is my project. I want you to train me." I said, "Baba, I'm a banker." So we exchanged the number, and I would like also to thank Mr. Sundar for confusing me between the, because I got that opportunity to go different place and got to know an actor, and he's my friend right now. So once again, thank you very much for being here. So I just wanted to tell some very funny things, because today I'm not going to talk about numbers, banking, and these things. I will leave it to my friends. They will talk. Today I want to be a little bit more funny, about funny stories. Before I attended this, Mr. Sundar called me. He said, "There is a seminar, there is a conference. It's about chartered account." And I had to do my research, like Mr. Ibrahim said, to do moral research. What is the chartered accountant? I heard, of course, I know about them. We are a banker, we know about these things. But I say, if this kind of conference is here, so we should talk about chartered accountant. We are privileged to be here amongst all talented, special, professional people like you. So, it was so funny. A couple of days ago, I was talking to one of my friends. I said, "I'm going to be guest owner of the chartered account." He said, "Wow, lucky you." I said, "Why are you saying lucky me?" He said, "I'll tell you. Do you know that similarity between chartered accountant and a beautiful, classy woman?" I said, "So strange. I mean, I know about the bodybuilding, I know about the chartered account, but what is this to do?" He said, he started laughing. I said, "Why are you laughing?" He said, the similarity that chartered accountant and beautiful, classy woman, both of them, they conscious and they concerned about their figures. So I don't know, both of them are important to us. Okay? So salute to chartered account, salute to all women in the world. Okay? Forget about bodybuilders today. So, I really appreciate CAs. We deal in a daily basis with them, and I have highly respect for all chartered accountants in the world. Sheikh Mohammed bin Rashid Al Maktoum, Vice President and Prime Minister of the UAE and the rulers of Dubai, once said, he said, I want Dubai to be number one. Number one, not in region, number one in the world. Number one in education, number one in investment, number one in housing, number one in selecting talented people. And he said, I want my people to be in the highest level of living. This is something we should think about it. Today, the entire UAE, our leaders, our ministers, our people who's talented, they are thinking toward the quality. Today, UAE is honoring people for the golden residency for these talented people. Doctors, engineers, scientists, talented people, actors, celebrities. But for me, chartered accountant is on the top. He mentioned about the quality, he mentioned about number one in everything. And I'm sure you will play an important role in this country. You will make his vision come true. Inshallah. Another, do we have time? Huh? Okay, because he gave me 20 minutes. Okay, so I want to make something also funny. I want to tell you that why it's important that chartered accountant here is playing a major role in this society, the society of financial. But before I start, there were two people, one a doctor and one chartered accountant. Both of them were in love with one lady. I don't know her. And the doctor was sending roses, every day a rose to this lady. The chartered accountant was sending an apple every day to that lady. So the doctor was shocked. He said, sorry, can I ask you something? I'm a doctor. Why are you sending an apple to a lady? I'm sending a rose to her. He said, one apple a day keep doctor away. So that shows how smart chartered account people is more about the smart and like this. With all respect to the doctor and other professional and like this. But it's something like, I want to say that in our life today, CAs, they play a big role in this society. And as a banker today, all these kind of merger, acquisition, VATs, taxing, and facility in the banks, giving facility or risk mitigation, it comes from chartered accountant. And last funny joke, which is I have to say that one of my staff, she's working, and 2 days ago, I was looking at her, she said, I know you are attending this conference. My husband is chartered accountant. I look at her, I said, how would you feel to have a husband, a chartered accountant husband? She said, I'm proud and horrible. I said, okay, you have to explain. She said, I'm proud of him. Outside we go, he's dedicated, managing everything. But the problem at night, when he sleeps, he's still talking about tax. He's still talking about the budgeting. I can't sleep. So that shows the discipline and dedication from the charter. Big clothes, big support from, salute from my side to those people who's really, really working hard. And I know that most of you going home late because of dedication. Winners, they don't need motivation. Winner, they need discipline. You guys, you don't need motivation. You are already motivated. Discipline, which is you have it. So, Mr. Sundar, he mentioned something very important about the establishment of central bank in 1980s. If we go back 50 years back, we did not have our own currency. We used to deal with rupees. Today, we are home to the leading financial center in the Middle East. And all thanks goes to our leaders, to our financial professionals, and to people like you. Also, somebody was mentioning about the changes, Mr. Ibrahim. This is very, very valid pointed. I think during this COVID, we've been through, I'm not going to go and dig about the COVID and what is the lesson after COVID, well, a lot of things. But we've been through, I could say, the deep, darkest moment in our life, which we survived. Some people, they lost their families. Some people, they lost their jobs. Some people, they lost their health, the mental issues and like this. But that was the change which made us stronger. And as a head of cash management in one of the largest banks in the Middle East, let me tell you the story about what happened during this COVID, during this pandemic. A story how we converted people, traditional customers, into digital. It wasn't easy. I remember my old portfolio as a cash management. We were, during that time, we took so many years to convince the customers about digitals. It was so many years. And I still remember 18th of March, 2020. I still remember that moment where they asked us to leave the office, work from home. I don't know from other banks, but I still remember 18th of March. That's the last day where I was in the office and my entire team was in the office. And we thought it will be 2 weeks or 3 weeks. We ended up 18 months at home. 18 months sitting. It never happened. And that change made us to be more creative. Change that to sit and to think about our customers. What will happen? In the entire portfolio, my entire portfolio, it was around 25% digitals, and the rest was manual. I was really panicking how to communicate with the customer, how to go through the entire changes. The biggest challenges we had face is to stop the touch and feel paper. Government, Central Bank of UAE, all they stop dealing with the paper, and they ask all banks to go digital. And how that changed, to convince the customer to change that mindset of the customer, it was the most difficult time. So we thought about immediate development, how to develop in the solution with approval TRA, and for launching digital platform like e-signature, e-wallet, direct debit, e-invoicing, you name it. It was a very difficult time, but we achieved it. And I guess all of you achieved it during this time. It was very difficult. I still remember that most of my team, they were working, and I had to call him consistently to find out what exactly the solution, how to communicate with the customer, how to take that challenge to go through that difficult time, how to convince. Customer used to shouting at us. They said, "Who are you?" "We are from the bank." "No, that's a scam. You are a cheater." We had to call on the personal number to convince them we are from the bank. And then slowly we put that kind of trust back. It took us a time. So the point here, what I want to just reach, change is the only constant. Sheikh Mohammed, the Prime Minister of UAE, and Sheikh Mohammed once said that if you don't change, you will be changed. And today we have announced a new government, ministers. You know, His Highness, he loves these kind of challenges and changes. And what this is we have to learn from. You need to be ready for change. You need to be standby for change. It's not only for any particular institution, but change should be there. We don't need to be like those companies where during our childhood, we used to hear about them, it's disappeared. Those companies, I don't want to mention name because of, as per the law, I have to avoid. But those companies, they don't exist now because of the creativity. They were not creative. We need to be creative. We need to change. We need to accept the change. Otherwise, we will be changed. So last not least, I would like to conclude my speech in one thing. Today, we are in the gate of Expo 2020. This is a special event for all of us. Not UAE national, not expat, all of us in this region. This is the first event happened to the first Arab city in the world, and first Arab country in the world, and we should be proud. So I encourage everyone to contribute, everyone to give the best, whether in social media, whether in, talking to the friends, business people. We have to be part of this society. We have to be part of this vision, okay? Keep smiling, keep shining, keep making UAE proud. Thank you.
Thank you very much, Mr. Mohammed Al-Ali, for sharing few interesting stories. And you also mentioned about the talented people, about the doctors and engineers. So we chartered accountant, as you mentioned, one of the talented people. So I think we need to jointly put up our proposal to the head of immigration to include chartered accountants in the talented list in order to get the golden visa.
Actually, my brother is working there and he's responsible about this. Today, in fact, I told him about chartered account before I come here, and I'm going to push this because at the end of the day, you guys, you deserve, you've changed a lot in this society, and I'm proud to see a talented professional people like you.
Thank you, sir, for taking our proposal and putting together. Now I invite our chairman, CA Sundar Nurani, and our treasurer, CA Manoj Agarwal, for presenting a memento to Mr. Mohammed Al-Ali as a small token of appreciation on behalf of the ICI Dubai chapter. Thank you very much. Now, ladies and gentlemen, now our guest of honor, Mr. Nishant Ranjan, will address all of us. And to introduce him, I would like to invite our ExCom member, CA Jayaprakash Agarwal. सर थोड़ी तालियां ExCom के लिए भी बजा दीजिए.
Thank you, everyone. I love the way Mr. Muhammad Ali delivered us. He made us proud, he made us smile, and I first time know that banking is not a serious game. Bankers can also smile and make us laugh. A handful of applauses for him. Thank you, sir. Thanks a lot. I love your smile. Okay, coming to Mr. Nishant Singhi. Now let's get down to business. Mr. Nishant Singhi is Chief Executive GCC Operations for Bank of Baroda. He has rich experience of over 30 years in banking service in all areas of banking in various capacities across India and overseas UK in Bank of Baroda. He started his career in Bank of Baroda in 1989, so almost like 21 years. He has spent with Bank of Baroda and have experience as branch head of international business branch for 2 years in Jaipur and 4 years and overseas branch in Kenton, UK. Mr. Ranjan is a seasoned banker, has wide exposure in all practical areas of banking, which includes assignment at bank branching, credit department, forex operations, internal audit, and planning. With his extraordinary focus and leadership skills, he has guided and led teams to successfully perform in all areas of banking across Bank of Baroda in India and overseas. With a round of applause, can we welcome Mr. Nishant Ranjan? Sir. It's a huge responsibility on your shoulder with 2 wonderful sessions at the start. Looking forward to it. Thank you.
Thank you, Jayaprakash. Good evening, friends. Good evening to all excellencies on the dais, all members of ICAI Dubai chapter, ladies and gentlemen. So it's very difficult after 2 very nice speeches to come here as the 3rd speaker. But I would like to just give some specifics of banking. So first of all, I thank ICAI Dubai chapter, especially Mr. Noorani, for giving me this wonderful opportunity to address such an august gathering of chartered accountants, bankers, and business leaders. To speak on, when I discussed with Mr. Noorani what should I speak on, I said you just speak on emerging trends in banking. But these 2 emerging trends have already been touched upon by Mr. Ibrahim and Mr. Muhammad in a very nice and lucid way. So, but still, because last couple of years has been difficult for everybody, including the banking industry, and it has gone a lot of changes and still going a lot of change, and you may, in a couple of years, we may see a totally different way of banking. So the evergreen mantra for any successful business is customer centricity, and is more so apt in case of the service industry like banking. For that to happen, we need to focus on the ever-changing needs of the customers, changing market dynamics and environment. The need of the present generation customer is convenience. With the kind of technological advancement seen presently, the word convenience has transformed into a different orbit altogether. And this has been hastened by the COVID pandemic, which we are still, many countries, and especially back home in India, it's quite a big suffering there. So it is said the difference between stumbling blocks and stepping stones is how we use them. This is factually true in our life. And I feel it's more appropriate to use it in this forum when you talk about emerging banking trends. Banking is not the same as you know after the COVID-19 outbreak, and the pandemic has shown an alternate way of banking. Now all services, whether it's opening a simple bank account, to transactions, operations, and all related services have become virtual. Contactless services have become a way of life nowadays. The rate of change is so rapid, and so is the adoption by banks. Banks are challenged now by fintechs. And today I saw in the newspaper a recent survey which has come out and says, back home in India, almost 70% of the clients will be more willing to do their banking through these new banks which are coming up rather than traditional banks like us. So it's a great challenge for bankers like us, how to keep engaged customers to us. And how do we do banking so we also get a share of the wallet, continue to get a share of the wallet of the customers. Banks are focusing now on contactless payment solutions, leveraging the rise and adoption of fintech and digital payments during this pandemic, and using this as an opportunity to adapt to new business models, upgrading of alternate delivery channels, introduction of new engagement channels like reducing customer services to the branch for reducing mobility in branches, and increased digital footfalls. Cost optimization and diversification of products and services. These are being more focused, and to have a sustainable business model. These strategies of the banking sector, I realize, go in hand with the theme of Expo 2020, which is just a couple of days ahead. That is opportunity, sustainability, and mobility, which is greatly espoused by the visionary leaders of UAE. Dear friends, now I'd slightly touch on Bank of Baroda, what we do in UAE, because I've been here since last 9 months, and I realize many of you don't bank with us, and many of you don't know what we do in UAE. So just a bit, Mr. Noorani did touch that we are here for more than 47 years. So that was well before central bank came into existence, and UAE was just a 3-year-old country when we entered here. So our first branch started in 1974 in Dubai here. And now we have a network of 6 branches across 4 emirates. And a network of, apart from that branches, we have 9 electronic banking service units and a network of 46 ATMs. So we are considered by Central Bank of UAE as the 4th biggest foreign bank here in UAE. We are thankful to the rulers and people of UAE to have given us this opportunity to serve them, and we are fully committed for years to come. Bank in the mainland, as you know, we are the only Indian bank in the mainland, and the bank acts as a bridge between Indian businesses and UAE-based organizations and businesses. We are here extending all kinds of services, including corporate customers, business loans, SME loans, and syndicated lending. In addition, we also serve Indian expatriates and GCC nationals with a host of liability and retail asset products such as home loans, mortgage, and vehicle loans. In line with the competition, because that is very tough here, and last couple of years, banks have gone virtual. So we are also trying to upgrade our system so you have better customer experience banking with us. Recently, we upgraded our mobile banking app, M-Connect Plus, with 16 additional services. And through that mobile banking app, you can remit funds to your India account also. So anytime, any 24/7, you can do it without coming to branch. We have our internet banking portal, debit cards, ATMs with cardless deposits, immediate bank transfers, digital payments, etc. We are also now upgrading, to be very frank, to enable our customers to avail banking service conveniently and efficiently. We have 24/7 services, ADC channels. We are also continuously upgrading our AML CFT processes to be in full alignment with CBUA guidelines and best international practices, because compliance and AML is a big challenge nowadays. And you would experience a lot of challenges while opening at least business accounts, what I have been experiencing here. So we would like to see that how we automate that. We are also bringing now tab banking and chatbots to serve you better. Now a bit about our India operations. Like Mr. Noorani said, we have completed 114 glorious years in India. So recently, since pandemic, we have now adopted a new business process re-engineering model called Bob Now. It is built as an industry-first operating model through new ways of working, and it revolves around mobile-first, digital-led experience in banking and reimagined network. increasing customer satisfaction while optimizing costs. Under this project, our bank in India has launched a new mobile banking app, Bob World, and our new revamped website recently by the hands of our brand ambassador and Olympian Miss PV Sindhu. The new app has end-to-end digital banking services featuring various options like investments, loans, shop and pay, rewards and benefits, etc. In addition to the basic banking services, we are now working on replicating a similar model in UAE. Under Bob Now project, wealth management business is the key focus area and redefine the wealth management business model which is currently underway. That includes segmenting customers into radiance and non-radiance clients based on their net worth and their relationship with the bank. We have brought in now 500 plus wealth executives to act as relationship managers for large and this is spread across India and especially in the 30 big cities of India. So where we are delivering doorstep delivery, family banking, preferred forex currency conversion rates for NRIs. Dedicated RMs and airport pickup and drop for our HNI NRI clients are being introduced in these 30 big cities. NRIs can also avail NRI home, mortgage, and auto loans without traveling to India by reaching out to our branches. We also have a dedicated NRI team here to provide support to you for your back home requirements in India. So to take further our bank's tradition of social banking, we are exploring avenues wherein we can develop a relationship with the vulnerable section of society and be a part of the UAE's vision of all-inclusive society with equal opportunity for each individual. We are there in Expo also in the India Pavilion, so we look forward to meeting you there at India Pavilion from 1st of October. I thank once again for your patience and ICA Dubai and Mr. Nurani particularly for giving me this opportunity to address this elite forum. Bank has been associated with ICI Dubai chapter for about 5 years, and we will continue to look how we can partner more to develop your interests as well as bank's interests. Thank you very much. Have a nice evening.
Thank you, Mr. Nishant Ranjan, for sharing a few strategies for the banking sector, and you also updated us about the products of BOB, Bank of Baroda. I think even I am one of the customer for you always. I have been trying to spread the word amongst the community to use the products and services of the Bank of Baroda. Now I think we will present a memento, please. Thank you very much, Ranjan Saab, for supporting us as usual. Before I invite our next speaker, I think Pankaj Mundra has got one question, sir, for you. Please. Mike.
Yeah, good evening.
Wonderful update by you on Bank of Baroda, UAE and global operations. In fact, as you mentioned about a lot of services being offered and used and not used by us, I've recently met Mr. Ishwar and he's been doing fantastically well on the trade finance products. Yeah. One interesting question, as you know, the BuildDesk was funded and supported by Bank of Baroda in 2001, and you were the first investor along with SIDBI. Yeah. And we all know the recent exit bought by PayU and backed up by Nespos. Do you think, and you, of course, Bank of Baroda is always innovative in investing in the tech ventures and as well as investing in tech itself to support the customer service. And you also mentioned about the supporting NRIs. Do you think BOB will take an initiative to support NRI for their startup being taken in GCC? So BOB taking initiative to support startup from a VC fund route from NRIs in GCC. Thank you.
Yeah, so startups, we are funding a lot of startups back home in India, and we have a whole startup product there in India. To be very frank, in this expo, we are actually sponsoring the startup innovation bus by India Pavilion. So we look forward to having developed some product for startups even in UAE. Sure.
Before I invite our next speaker, I will request our technical team to play the video of our principal sponsors.
ये आजकल के बिजनेसमैन भी ना छोटे सपने तो देखते ही नहीं। अब अनमोल को ही ले लो, 4 साल से जानता हूँ उसे, टैक्स कंसल्टेंट हूँ उसका।
2 क्लॉजेज है ना सर, वो मुझे समझ में नहीं आया।
उसने गारमेंट शॉप खोल ली, केबल फैक्ट्री डाल दी, प्रॉपर्टीज भी छोड़ दी, पर मजाल है कि बिजनेस का पैशन थोड़ा भी कम हुआ।
10,000 मीटर। आई एम सॉरी, मैंने टाइम देखा ही नहीं सर वो।
न चैन से रहता है न रहने देता है, दिन रात सुबह शाम बस कॉल कॉल और कॉल। राकेश जी रिटर्न्स फाइल कब करोगे? ई-वे बिल कैसे बनाओ? यहां तक कि
गाड़ी कौन सी लूं सर
भी पूछता है।
सर गाड़ी ले ली सर।
लेकिन फिर जब आपसे नहीं पूछूंगा तो किससे पूछूंगा कहता है ना, तो पता चल ही जाता है कि कितना भरोसा करता है वो मुझ पर। इसलिए सोच रहा हूं कुछ दूं उसे, जो न सिर्फ उसके बड़े बड़े सपनों के काम आए, बल्कि मेरे काम को भी थोड़ा आसान बनाए।
पेश है टैली प्राइम, टेक्नोलॉजी में एक नया नाम जो बढ़ाए आपके बिजनेस की शान। आजमा के देखिए आज ही।
The human mind is an unstoppable force. With every new challenge, we evolve. It's in our DNA. It's this very spirit of determination that created a bold new venture in 1993. An enterprise which over the decades has enriched the lives of many across the Middle East. In its relentless pursuit of excellence, the name Danube has stood tall, resonating with the unique and singular. When you expected quality construction and innovation, we engineered Danube Building Material, a trusted name in the industry. When you imagined the lifestyle of your dreams, we crafted the most bespoke and conceptual living experiences with Danube Home. Our timely delivery of exceptional properties is a major reason behind our stellar success in this domain. Danube Properties is considered amongst the top 5 developers in the UAE. To further enhance your lifestyle to match the requirements of modern living, we envisioned Casa Milano. Acknowledging the growing concerns of human safety, Danube's subsidiary Alu Copanel Middle East came into existence with a primary goal to provide first safe aluminium composite panels. We built our world around yours, so you always had nothing but the best. And now as we face a new one, brimming with possibilities. Danube is resolute in delivering the very same promise that has always been our trademark. Always more. Always extraordinary. Always unstoppable. Danube, all you need in a whole new world.
UHY James Chartered Accountants, led by Mr. James Matthew, is the exclusive member form of UHY International in the UAE. Headquartered in the UK, spread across 101 countries, 330 business centers, with over 8,500 professionals, UHY International is the 18th largest accounting network globally, with audit advisory, task, risk assurance, technology, and cybersecurity services. UHY James is proudly one of the 17 regulated auditors with DFSA and ADGM. 150 years of practice among 5 partners. UHY James Chartered Accountants is committed to your growth story.
For over 6 generations, we have been serving our customers what matters to them most. Year after year, generation after generation, we've been able to present premium quality with best prices for our valuable customers. Welcome to IFCO. From our headquarters in Dubai, we oversee 80 world-class operations across 40 countries on 5 continents.
Thank you. ICI Dubai chapter is also having a bank account with Bank of Baroda, and I request all of you to support Bank of Baroda in whatever way you can. Now I would like to request all the past chairmen and ExCom members to come on the stage for a group photo. Ladies and gentlemen, now our speaker, Mr. Dheeraj Kumar, will address all of us. And to introduce him, I would like to invite our ExCom member, CA Manoharan Palerichal.
Respected members and guests, good evening. I would say SMEs are anchors for any economy because they are primarily responsible for driving job creation, innovation, and developing new ideas in the business. As per the definition given by Dubai SME officially for SMEs, 95% of the entities registered in Dubai are from SME. 43% of the workforce is also from SMEs. More than 40% value addition to Dubai economy is from SME. That is the importance of SMEs in Dubai. I've been working for last 18 years to serve more to the SME in UAE. For any business, the cash flow is the lifeblood for any business. If cash flow ends, business dies. But the banking sector takes the responsibility of heart to pump cash to the business. To talk on this subject, an expert is there today. Let us hear from that expert how the banking sector in UAE is supporting the SME sector in Dubai, in UAE. to give you a brief introduction of the speaker, Mr. Dheeraj Kuvar. He has over 19 years of banking experience in a wide range of roles across India and UAE with different organizations like RAC Bank, Mashrib Bank, ADCB, HSBC, ICICI. He has completed the EPGM from MIT Sloan School of Management, USA. He is a certified associate from the Indian Institute of Banking and Finance, and he also holds a master's degree in business from the Institute of Chartered Financial Analysts of India. Currently, Mr. Dheeraj is the Managing Director of Business Banking at RAC Bank. He leads the business banking division's commercial strategy, business development, and tactical planning. Also, currently, he chairs the UAE Banks Federation's SME committee, which advises government entities and the Central Bank of the UAE on matters related to banking. We are lucky to have Mr. Dheeraj Kuvar here on the topic, SME banking landscape in the UAE. Looking forward to hear from him the market, players, risk, challenges, and future for this topic. Please put your hands together and help me to welcome Mr. Dheeraj.
Thank you for your kind words. At the very outset, I thank the chapter for inviting me. And we had the privilege to have some fantastic interaction with our guest of honor. You know, one of the things that you pick up in your childhood and primitive years, that you tend to develop admiration for community or professions that you particularly don't think that you are made for. So accounting was kind of a fraternity that was always intriguing, but you know, I did not develop the knack for numbers, but still I landed up in banking and all I do is numbers. Out of last 2 decades of banking engagement, particularly last 10 years has been in SME. And when I say 10 year is a milestone for accounting. Now you can well imagine I'm fully depreciated and value 0 in the books of RAC Bank. Having said that, today it's a very important discussion, and that in any community or any business chambers, the one discussion will always come on the table, which is how do we deal with SME, how do we help SMEs raise finance, how do we regulate SMEs, because everybody knows that SMEs are a very integral part of any economy. And of course, as our previous speaker said, that SME is the largest contributor of non-oil GDP, of course generates a lot of employment. So we know the context, we know the importance of this community. Let's dwell upon this discussion for next 20 minutes and see how do we make this interactive. And I'll not have a monologue from one side, and I'll appreciate at the end of this presentation, I think there is some time scheduled for question and answer as well. So let's understand and set the context of when we say SMEs, and as thought leaders, as accounting community, you have lot to play, and you are one of the very important stakeholders in the entire SME ecosystem. Now, if we see SME as community, of course, the company law definition is clear. Any company up to 250 million of turnover is categorized as SME. And you will see that SMEs, by definition, would like to get into a low capex businesses, namely services, transport, trading. But some of them turn out to be good manufacturers. But one thing that differentiates SMEs from their fellow bigger counterparts is their ability to be flexible, their speed to market, and above all, their innovation. One of the things that is always understated about SMEs is their ability to innovate. And you have seen, it is not a coincidence that the entire world today is riding the bandwagon of startups and unicorn, and those are essentially SMEs. So of course they have ability to transform businesses. Of course they have ability to think beyond the foreseeable future. Yeah. So when we talk about SME as the entire ecosystem, who are the main stakeholders? Of course, the government entities, the industry bodies, chartered accountant bodies, banks, now fintechs, are the integral part of the SME ecosystem. And today we need to discuss that everyone has to play an important role, and we also need to go beyond this funding issues that SMEs always talk about. As industry leaders, we also talk about. But I think the SME landscape today and the SME community today has far more requirement than sheer funding requirement, and we will discuss about that as we go along the presentation. In terms of the players who are taking the main responsibility today, I think UAE is a heavily banked market. You know, there are 50 odd banks, but some of them are particularly active in SME space. So if you see the banking landscape in the country, of course the big boys like ENBD and ADCBs and RAC Bank has a fair share of SME banking. Of course FAB and Mashreq is not far behind. But this is one segment that all top banks have been interested to do. But this side of banking, this piece of banking has not been easy for anyone. And for the reasons known to each one of you, that the high mortality, the compliance, the service cost, makes that SME banking proposition challenging for banks. And for SME themselves, if you talk about their own sets of challenges, and we will discuss as we go along. If we see the SME landscape and for a moment discuss that what is that few things that has been troubling SMEs forever. And if today we just do a plain voting, and if I ask each one of you, what is the biggest problem for SMEs? Without a doubt, everybody will say access to finance. Being a student of SME banking for over a decade, I can tell you that it is not about access to finance. It can also be because of access of finance that SME falters. We have ran a lot of studies academically or in the professional environment. The biggest risk of failure in SMEs has been on account of fraud, on account of concentration to key buyer and supplier, on account of lack of succession planning, and access to funding is number 4th. But when we have a community engagement, we will always talk about access to funding. What about governance? As we always say, accounting is not a cost, it is an investment. How many times we go and advise SMEs to put a proper governance structure? And when I say governance structure, I don't mean to employ Big Four. I mean to say that you need to have somebody who can take your shoes when you are away. You can have good bookkeeping. You can have diversified set of customers, diversified set of suppliers. In many ways, COVID has taught us many things that we could not learn. One is the ability to take technology as the value driver. And if we see in terms of top 5 challenges that we have just put across, now credit risk is something that every chartered accountant knows, and SME also knows. Nobody wants to lose money. But sometimes it's very fancy to have a big blue chip corporate name in your corporate brochure, but if it doesn't pay you in 210 days, what's the point? That is how you manage the credit risk. And today, SME can demand that bargain, because in the changing dynamics of world, today in UAE, for example, today, 40 to 50% of SMEs, small micro enterprise sales is happening through likes of Amazon and Noon and Namashi and Shein and whatnot. Now, the way marketplace, the digital marketplace, Google's and Amazon's of the world has done, what has they done? They have democratized the supply chain. Today, if your product is regular, you don't need to worry about your brokers and intermediaries. If you are selling fast, you will be invited by big boys. As long as you create value, you will have customers. That is how we need to engage, and why I'm stressing on these concepts, because you engage with SMEs. We engage with SMEs, and it is our duty to go and have a dialogue, have an advisory which goes beyond the financing word and financing discussion. Then we talk about technology. Technology is something that SMEs has been particularly good at in terms of accessing the innovation or trying to get very, very smart when it comes to delivering product and solution to the market. Today, if you want to order, and you want to order in next 24 hours, I'm sure you will not go to a big corporate, you will go to SMEs, because you know that they will deliver in no time. Then the ongoing pandemic and ongoing economic recession has always been a challenge, and when you are the last guy in the value chain, you need to manage the risk. But couple of risks I will highlight, that's something that we must engage with SMEs, is the cyber risk and is the compliance risk. Today, you are in this business, and SMEs are always tempted by some margins and some one-off deals. But if you are trading goods with a sanctioned entity or a sanctioned country, you may not realize the risk today. But over a period of time, your financial partner or your corporate customer will find it, and that will be a very eventful day for that business. So all I'm trying to stress is that as community, we need to engage with SMEs and say that how important the compliance risk is. And I'm sure some of you have heard about the FATF guidelines issued to central banks and onward to the banks. It is becoming a challenging task to bank SMEs unless there is a proper disclosure, unless there is a proper risk framework. Then cyber risk. How many times you would have seen that there is an email hacking and some fraudster claimed to become your supplier and change the bank details, and your money went for a toss. Many times that bank troubles you to get OTP and to smart tokens. It is only to make sure that your interest is protected in this digital world. So I'm not talking about how many $1 million lottery I have got on emails. This happens to SMEs as well. And SMEs, it is much more sophisticated cyber attacks these days. Once we talk about the challenges to SME community, the same challenges comes back to the banking institution. And today, why some banks shy away from this business, and why banks has not been particularly good at, turning out credit applications, it is because of these challenges. If you just pass around any road where you see many restaurants, every 3 months you will see a different nameplate on those restaurants. I'm just picking this small example because that signifies and that demonstrates the hypothesis that mortality rate is so high in SMEs, and it is not their fault. Because, managing risk is not easy for anyone, let alone SMEs. So that happens. The cost of compliance today, if, Mr. Nishant was talking about business account and the niggles and the rigor of business account opening. Sometimes, banker become a bad boys and it becomes a very difficult discussion with SMEs, that why are you asking so many questions? I'm not asking for loan but this is because that as a financial institution, I have to comply the central bank guidelines, I have to comply the Commonwealth rules, I have to apply FATCA, I have to go for correspondent bank which clear dollars for us. So the cost of compliance is also very challenging stuff for the banks. Then when the risk is high and operating cost is high as well, there is always a risk, shareholder return issue. That's also one of the impediment why we don't see many banks going in and putting large capital on this business. Now, what is the future? We all know about the challenges, we all know about what banking is facing, we know about what SMEs. So UAE government has done many path-breaking initiative. Credit guarantee scheme is one, innovation fund is another. RAG Bank had the privilege to participate in both the initiative taken by UAE federal government. We work with banks like EDB and Mohammed bin Rashid establishment where we are the agency bank for the innovation funds. This is the future, that if the government tries and help the SME community. By the way, the new guarantee scheme also include the expat-run businesses, which was not the case before. So these are the changes which is happening in the marketplace. The second is that all our speaker has dwelt extensively is the advent of digital technologies. And when I say digital technology, let me explain you why this is the future for all SMEs, let alone the banks. Banks, it's an oversold story. For SMEs, for example, today, I was just talking to one of my friends that, in our times, if there is a great sweet shop, say Agrawal Sweet in one nook and corner of Jaipur, generations after generation, people will go to that sweet shop. Because the father will tell a story to the son and son will tell a story to the son. That model has changed. Because your son today, who is 16-year-old, is not asking your opinion on the restaurant choices. So his choice is being delivered by his set of folks who are on Instagram. So your brand building is not happening with your grandfather's stories. Your brand building is happening on your Insta presence, on your Facebook presence. Whether you like it or not, this is the basic identity a business has to have. And the great part of technology, it's democratic. It does not cost fortunes to build a Facebook page. But you should not quash away that, no, nothing happens like this. You cannot be cynical on embracing digital. Second thing, today, what is your OPEX if you want to have a shop in Bardubai or Meena Bazaar and Karama? It's a fortune that you have to pay key money and you have to have a high rent. Guess what? What is cloud kitchen? Guess what? What is online business today? Today, we work with Amazon and we work with few more e-commerce companies. Today, a customer who sells highest in Amazon does not have a retail shop. He has a warehouse in the cheapest locality you can imagine. Northern Emirates, doesn't matter. Because logistics makes the country accessible from all four. So that is what I'm saying, that for SME engagement, when accountant advise the SMEs, it is about how important and how critical is to have your digital identity. The same thing comes with the governance. What is your backup plan? What is your bookkeeping? Tally is your sponsor. Now, Tally is a great brand. But something happens to your shop. The insurance company asks for the invoices to pay your insurance claim. If you have a OneDrive PC, your data is gone. One thing typical and peculiar with SME is that for them and for anybody, spending money is not an easy thing. But unless you scare them in that many words, that what will happen if your data goes, then they will understand. If you say that you will have potential loss of business, if your data is not protected. You will have a decline in insurance claim. Those are the things that we need to engage as community and advise them, advise to SMEs that what is the way forward. Now a little bit of sales pitch like Nishant sir already started. Who are we? I'm sure the bank is known to all of you. This has been a bank, and the bank fame to glory was SME banking. Even today, though bank is much diversified in balance sheet, but this is one peculiar bank in the entire GCC where SME is the largest department. So you can imagine, it's a very different bank in that perspective. The shareholder, the board, and the management understand the importance. And we have been doing this business for 20 years. And our approach to this business has always been consistent. That we know SME is a cyclical business. You will lose some, you will make some. But at the end of the day, on a longer time horizon, it's a good business. Our value proposition for SMEs has been around typical transaction account, financing, trade finance. But we also have a very serious acquiring business where we provide payment gateway, mobile machines. Now e-invoicing on mobile SMS payment as well. We also have a subsidiary called RAC Insurance, so of course we provide insurance service as well. But we also have an omni-channel business, so business banking customer has their separate app. And we have a marketplace called SME Souk where SMEs can list their deals. They have community, blog, partnership deals that they can access to government services. That's a marketplace for SMEs, and we say SME Souk Connect to Grow. And our experience in this segment has been good, and that is how we host a lot of webinars. We had webinars with NASDAQ, ADGM, DIFC, EDB. Every quarter we do webinars, and all of you are free to join. We do advertise on our social media handle, and these are very informative webinars that we for example, we took a session with VAT, we took a session with the new compliance regime, we took a session with the cyber risk. So in terms of digital initiative, as we have been talking about digital, what bank has been doing, that I think RAC Bank is the only 2 bank in the country where there's a digital account opening or digital onboarding for SME customers. You can get the number. Of course, there is an internal approval before activation of account. And again, the power of digital and power of social media, the amount of lead we get from social medias, you can imagine. So what I'm trying to profess is something that we practice. We also have something which is, if you have a store, you can take it online, you can start making cards, you can do a link on SMS and you will get paid through credit cards. These are things normally was a product for corporate banks, corporate customers. But now we are giving something for SMEs at a corner shop. One thing which is also unique in our offering is that we have an integrated accounting software in the digital banking. So you can set up your account, you can do trial balance, you can do invoicing, you can do bank reco, and you can also authorize VAT payment and payments from the accounting itself. You don't need to go to digital banking. So those kind of small innovation which helps SMEs to do their bank efficiently. So today we give in a package which is a zero balance package, we give insurance, accounting, VAT, and digital banking alongside that. That helps SMEs that they don't need to worry about accounting to a different party, insurance to a third party, and then digital banking to a fourth bank. I have ran this presentation fast because Sundar told me, and that has been my experience across the globe, that whenever there is SME conference, banks will be beaten up. That you don't give loan, you're not contributing to the society, you take 1 month to this. I am ready for it. Come on.
Thank you, Mr. Dheeraj. I know. Just want to ask you, it's a chicken and egg situation. Yeah. What happens is you should have enough portfolio to take a risk in SME because it's a high risk, At the same time, because monitoring, onboarding is a cost for the banks. So what is your opinion, for the banks? As you said, some banks shy away from SMEs and some are encouraging for the SME finance. So what is your opinion? I mean, how does the banker come out of this chicken and egg situation?
I mean, we are at a different level because we left the chicken long back because we have a big portfolio. So for us, the problem is of different kind. Because we are a large player, we need to continuously churn our book. So for example, we have a SME banking portfolio in excess of 8.5-9 billion dirhams. The single largest lending in UAE by any single bank. So of course we have a long-term commitment. But my experience of, why we are probably better than, I know we have colleagues from other banks as well, better in understanding this business because one, our long-term commitment. If you see many banks, they had, come in, come out strategy in this business. For us, it was always committed line of business. Secondly, we serve the entire spectrum of customers. So when you are a startup, we open your zero balance account. When you are 1 year old, we give you a business loan. So when you are 3 years, we give you trade finance. When you are 10 years, we also take you to NASDAQ for listing. So we have the entire life cycle of product which commensurate with their needs and profile. That's how we don't, because the point is, if you are taking a risk, you have to diversify a risk at the entire life cycle of SME. Why particularly SMEs become a high risk game? Because you tend to take risk when they're small and then you leave it for the corporate bank to enjoy, which I don't let Kumar do. Monitoring, yes, because now I didn't want to bore you with, so there is a lot of stuff happening in banks on the data. For example, I can share the things that we monitor for SMEs is not the same the way we monitor a corporate bank where your credit events is your rating, your balance sheet. One thing RAC Bank is very good at, we never look at balance sheet for lending to SMEs. That might be some loss of business for you, but in a way what we are trying to say, we rely far more on the dynamism of transaction and statements and VAT, then we get comfort from balance sheet because we think that SMEs today cannot be evaluated on balance sheet alone. So I think our monitoring plays a very important role, and we use a lot of data, a lot of analytics to get there. A lot of analytics, right from the bureau to the transaction history to check returns to compliance, everything.
Hello, Mr. Ranjan. Yeah, at the back.
Yeah.
So my question is regarding the personal banking. Like for the personal banking, there are so many options. People can open the account even in the bed. In all banks, not in all banks.
Yeah.
But when it comes to SME or business banking, what I have seen is that bank will call you at the places or branches. They will ask you a lot of documentation. Even if you have documentation, they can ask you for, bring your sponsor or someone else. Apart from that, if you are a free zone company, there are a lot of additional documentation and banks are hesitant to open an account.
Right.
And even I have seen not a particular bank, but across various banks, there is a huge amount of deposit or a minimum balance, even if it's a current account. I do understand that in credit, if the bank asks for deposit, that's understandable, but even for current account, there is a requirement. So how you can tell that this is supporting SMEs? It is like a hindrance.
Correct. I think it's a very fair question, and I think I give you my appreciation for asking it in the first question, because this is something that every SMEs struggle. When you are a personal customer, individual customer, you have identity. So you work for a company, you have a salary coming in your account. So what is the risk bank has? You get 20,000, you spend in Novo Cinema, you spend in Zomato, this is easy life. Because you are a known personality and you have a work visa, and I click your LinkedIn profile, I know everything about you, your visa is connected. Now from a business customer, see a situation that I am a bank executive, I get someone he just landed in Dubai today from, I'll not name countries, any country. He came to RAC Bank office, I want to open account. So what is your business? Export, import. So what do you export? I will export. So, but what is the plan? Right now I don't have plan. So how will you manage that risk? Who is the owner? I am the owner. He cannot write the company name in plain English. But he is the owner. Of course he is not the owner. The issue in business is that you are dealing with the customer who is not the customer who funded the customer. So your UBOs are different. Why he is not able to tell? Because his plan is to take money from one country and park it here, buy a nice villa in Palm Island, go back, again bring bag of cash and do the same. That is not banking. That is trying to help a guy to illegally take money from one country and invest in another country. So that's a risk that bank has to face. Unless, see, we open 1,000 account a month. So of course we have the appetite. But if as a customer, you know what you are doing, some banks will definitely open your account. Some banks has a different risk appetite for free zones, because as the word free zone, free, you can do anything. Because free zone is, you are exporting to 180 countries. You can import from 180 countries. The point is we don't know. If you don't know, you should be careful. So that's the problem that a business bank faces when they onboard a customer. But if you have a legitimate business, see, as a bank, we look at the guy who runs the business. And we have opened thousands of accounts for free zones. That's not a problem. Problem is that as long as you know the business, we will open an account. That's all right.
Hi. Dheeraj, I got your point, but I never understand, as soon as you buy an insurance of say $20,000, $50,000, or put 100,000.
Suddenly why it becomes a holy cow business.
Yeah.
That's happened. That's something that you touched a very important point. It is something that Insurance Regulatory Authority, by the way, if any of you get this experience, I am aware of this practice in some banks, particularly some bank less, some bank very, very blatantly, you should escalate it with your complete might. You write to the CEO, you write to the central bank, and bring the perpetrator to task. I am from that community, but I am telling you, this is a practice which is not with support of the board, with not support of the shareholder. This is something that they might be doing because they know that account opening is difficult. And by the way, of course, the guy who is telling you to buy insurance policy is not the one who can influence the business account opening. It's just a question of wrong selling, period.
See, again, you say you raise this question to others like a CEO or something. Then what will happen? You will end up without opening an account, right? Raise the question, it's good, right? And then how to open an account again.
No, I understand.
Story, right? You cannot open the account, right? If you go and bust these alarms, right? As a businessman, see, I came here, say, 2 years back, and I have been in a situation, right? I have been in RAC Bank, Mashreq, every bank. Thanks to Mashreq, they opened. Okay, I'm sorry, RAC says, sorry, we cannot, right? But what was the difference, right? We were having business, everything. Definitely, we were new here in the country. We were not having any history.
Right.
Right, it's a business.
Right.
As soon as we buy insurance, everything was super fine.
Right. That's what I'm telling you.
And
if
and
you
if
have
I bust to you, then you will say, sorry, we cannot open. Thank you. We will remove this employee.
That's fine. No. What I'm saying, if everybody start thinking that way, then you'll never be able to eradicate the problem in the system. What I'm trying to say, when we open 1,000 accounts, of course we have appetite to open account. But if somebody is doing a wrong selling, you should definitely exercise your right. And again, I'm telling you, opening account and buying an insurance policy has nothing to do with each other. Nothing to do with each other at all. And you're right, we have terminated staff on trying to do wrong selling like this.
Hi, Dheeraj, I have one question. Basically, I know because of AML and CFT regulation, things have become even more tough. So a lot of multinational company we come across, they face a lot of issues in opening bank accounts. So maybe it is because of the regulations have become more strong, but what my question is, what banks are doing to help these multinational companies who have maybe more complex structure, but they're still dealing, like I know somebody dealing with HSBC in Europe, but they cannot open bank account here because of a complex structure. So what banks are taking, what interest are they putting into bringing those companies, and because they are like, why do we operate if we don't have a bank account?
No, I agree with you. See, multinational is a different challenge. I don't think this is a challenge of compliance. This is challenge of extensive documentation, because they have multi-layered UBOs, Cayman Island, BVI companies, and you have to go and do legalization and notarization of document. So I think it's not a question of that bank doesn't want to open account, but it's a question of whether the firm has the right documents, because suppose the company is registered in Cayman Island. As a bank, I have no means to check whether this company is legitimate or not. So what banks have done, like including bank like us or ADCB and few more, they have also employed lawyers to do this process. That, if the company is there, because a lot of BVI companies now also has online registry. So you can go and verify online documents. But I take your point, as a bank, what the community is trying to do is having a session with the prospective customers, engage the neutral lawyer services. For example, for India, we have a desk in the Consulate of Dubai, where we advise clients on the matters which is related. Like in COVID, for example, a lot of people could not travel. So we created a special provision for attestation and legalization. So I think it's a continuous engagement. It is not something that you have a magic wand, but it will get better with, and I'm not taking excuse that $1 billion was fined, to banks so that bank has the license to trouble customers. No. I'm just saying it's a continuous engagement, and nobody is perfect at the task, but we need to keep striving for getting this engagement better.
Yeah, last one, Mr. Dheeraj.
Yeah.
I have a concern as well as a request.
Yeah.
Currently, our payment gateway of ICI is with CBD.
Okay.
We tried to open with Mashreq. It got rejected.
So again, in the payment business, the big boys are MasterCard and Visa. So, for example, Rack Bank works with MasterCard only. So every entity has their own risk acceptance criteria. For example, in some banks, they will not acquire online businesses because their monitoring does not do IP tracking. So if you can't do IP tracking, if somebody is buying from a sanctioned country, you will not be able to check.
No, sorry to interrupt you. This is for ICI I am talking.
No, I understand.
Yeah. For chapter I am referring.
So for your body, it might be a commercial issue. I'm not the right one to comment on. Yeah, so it might be a typical issue. I don't think that for an industry chapter, whether it's a commercial issue, I don't think this is a risk issue. Thank you.
Thank you very much, Mr. Dheeraj Kumar, for your kind words. And I think you have addressed about their future as well. Few embrace digital, fintech, and new age technologies. So thank you very much, sir. Now I would like to invite our chairman, C.A. Sundar Nurani, and our vice chairman, C. Anurag Chaturvedi, for presenting a memento on behalf of the ICI Dubai chapter to Mr. Dheeraj Kumar. Thank you very much, Dheeraj. Now let's have a raffle draw, which I promised in the beginning. Apple iPhone by HLB Hemd. I hope you would have dropped your business card into the pot at HLB Hemd kiosk. If not, this is the last opportunity to drop your business card, which is in my right-hand side. Please drop your business card. Thank you very much. Can we have a big round of applause for HLB Hemd? Now I would like to invite Rahul with the pot. Please, come on the stage, please.
किसको लगता है वो lucky है आज? I can see some names at the top. Manisha is there. I can see some names. Pradeep is also there. I can see some names. Robotic Solutions. I don't know. You can be lucky. I'm again putting it one more round.
So who is the lucky winner? I think countdown 3, 2, 1. Mr. Rajiv. Maldini LLC. I think Mr. Rajiv is not there, so maybe we can try for the next one, please. Rajiv Saab, congratulations. Please come on the stage.
Sir, please come.
Now our next speaker, Mr. Kumar Muthia, will address all of us. And to introduce him, I would like to invite our ExCom member, CA Rishi Chawla.
Thank you, Secretary Sir, for this opportunity. I really appreciate that. Hello, everyone. As you know, we are in a rapidly changing technological world. There was a time, I remember, when the checkbook is the way to do corporate business. But nowadays, it's all on the internet. So this is how the world has changed, and we have a very learned speaker here with us. Ladies and gentlemen, our next speaker is a science graduate and a certified associate of Indian Institute of Bankers, and is also a CFA. His expertise lies in client relationship management, strategic business development, and credit risk management. And he's going to talk to us about corporate finance. He's an experienced corporate banker and had served State Bank of India, Credit Agricole, and ADCB for the last 35 years. He's currently working with ADCB Dubai as divisional head, handling government-related enterprises and large strategic clients of the bank. Without taking much time, ladies and gentlemen, with a big round of applause, please join me in welcoming our next speaker, Mr. Kumar Muthia.
Good evening. Mr. Chairman Sundar Nurani, respected committee members, members of the chapter, my colleagues from the banking industry. Somebody said 92% of Dubai economy is made of SME business, but I'm here more to talk about the other 8% or the lesser percentage than 92% on corporate banking. I'll try to make it as topical and relevant as possible to this crowd. So the agenda today is in 3 parts. Yeah, the COVID impact. Actually, we're going to say where we stand today and what next, but I'm going to skip this because of a small conversation I had with Manoj while sitting on the dais. Few weeks ago, I attended a conference on bonds and loans, where the event organizer told me that the attendance is about 80% of what they had seen in 2019 pre-COVID. That's an interesting observation because people are coming back to normal. It's a new normal, gradually returning back. So I asked Manoj the same question. Compared to the 2019 summit, banking summit of chartered accountants, what percentage of audience today we have. He said 200%. So the community here, the chartered account community here believes that we are back to normal or we are back to more than normal. So I'll skip that part. Maybe I'll cover for 5 minutes or so. Then we are going to talk about the relationship banking, the corporate banking side. What I am trying to do here is to turn the table. Rather than saying what the bank are going to do in this field, I'm going to turn the table and say, what do we expect the corporates to make the bank a relationship bank? I'll try my best. And the third part will be the trends in corporate banking. The most topical one is the interest rate changes, interest rate benchmark changes, which is the dollar LIBOR moving into dollar SOFR, and then some traditional banks. We spoke about traditional, Ibrahim spoke about traditional banks versus fintechs. Of course, I wouldn't be as elegant as Muhammad Ali to talk about Vivek Oberoi. I'll do my best. We had, of course, a brave banker taking all your questions. I don't know I can be that brave, but I'll try. And last but not the least, the digital currencies or the cryptocurrencies. We'll keep that, the last part, the third part, to the last 5 minutes or so. Just to be clear, these are my personal views, what I am going to present here, and these are not my bank's views. So that's good news for you because there is no marketing going to be about my bank during this presentation. I'm sharing my experience as corporate banker, which I gathered and gained over the last 30 years. So I will be embracing this presentation with a few stories. But I promise the presentation wouldn't be overwhelming you with any data points, because the data points you can always get from Google. So I'm going to spare you with any data points here. And the COVID impact, government extended support through the central bank and the banking system for more than a year. It started in April 20. I think it's going to end in the December 2021, the TESS scheme, Targeted Economic Support Scheme. The green shoots are emerging in the market. You all know better. You all talk to people in various industries like us. So we see clearly the green shoots are emerging in sectors like real estate, in some parts of hospitality sector. So that's good news. There is a mindset change. Some of the speakers earlier talked about the mindset changes where people were queuing up to the banks in April 2020 to sign up for digital banking, where people were hesitant before to sign up while banks had the products. Clients were unwilling to sign due to their own perception of risk. But we saw that mindset change happening, the paradigm shift happening in April 2020. Which companies weathered these crises better? We're not talking about the sectors. We know some sectors didn't get impacted on this, like the cargo sectors or the online shopping or the technologies companies or even some parts of healthcare sector. So we're not talking about those companies. Companies which got impacted, which companies weathered the crisis better? The ones which had liquidity and the ones which did cost rationalization as soon as they saw a problem coming. And these are the same companies which are bringing those resources back, which are bringing those costs back when they saw the green shoots emerging. Coming to our main subject today, relationship banking. Banking is a relationship business. So somebody said we are all from different banks, so not all lenders are created equal. We are all different in terms of the products we offer, in terms of the services we deliver, in terms of the culture we are made of, in terms of the people we are. So each one of us are different, and hence that's the reason you as corporates should kind of look up to how you can get the best out of the relationship banking. So connect with your bankers. This is a very simple advice, connecting with the bankers. As relationship bankers, we need to connect with our clients, and as relationship bankers, you need to connect with your bankers. I'll give you one example which happened in my early days of banking in State Bank of India in Baroda. This was early 90s. I had a client who religiously met with me and my line manager. every quarter, it's a mid-sized company, this is a pharmaceutical company, every quarter the company owner and the finance manager used to meet with us. I used to wonder because sometimes there's no agenda at all, but they were meeting with us. And when I look back in the portfolio I had, the company to whom I was batting more for in my committees, in my credit forums, or in my compliance operational issues when it comes up, that was that company. It's not because they satisfied my ego and I was talking on behalf of them. It is just because I understood that company, their business model, their risks, and how they're managing that. I was clear in my mind because of this constant interaction with the client. And that helped the company and me. And that's exactly my advice, that connect with your relationship manager because they are going to be your spokesperson within the bank. Tell them what your management is made of, what action you're taking, what risk you're facing. Please open up with your bankers and disclose your credit issues. If you find anything coming up in terms of any risk emerging, please disclose them. That helps because we as bankers can proactively address those issues if we find it in advance that there are these issues coming up. Allow time for closure. We are living in a world, in a fast-paced world where we want to close everything yesterday. But in banks, we work in a governance structure where we have to do our due diligence, where we have to go through our committees, where we have to do legal documentation. All these takes weeks. So give yourself 4 to 6 weeks to do a deal closure. So work in advance. That is, allow some time for the deal closure. And this is an easy bit for me to say, do not focus only on interest rates. But there is a reason for me saying this. Because the banking product has several features in it. If I'm giving you a credit facility, it has several other features in it in terms of longer repayment terms, flexibility to utilize the facilities, and so on and so forth. So focus on those aspects. Pricing should be only one-off and also possibly in the lower rung of your priorities. Why do we bankers, when we come and speak to you, we speak about what other business we can do with you other than doing a general business? Can anyone try and tell me what is the lowest return product for a bank? We offer lots of products to you. Which could be the lowest yielding product for the bank? If anybody could try. Bank account, you said? Yeah, could be. Any other try? Actually, contrary to popular perception, the banking model, the bread and butter of banking is to take deposits and give loans. But actually, loans is the lowest yielding product for a corporate banker. I'm not generally talking about the banking. For the middle and the large corporates we are talking about, loans is the lowest yielding product. So if I have a risk-adjusted return methodology in my credit process, and I have, say, a 10% return on risk required on a relationship, a loan product gives me only 2 or 3% of that return out of the 10% my return requirement. So I need to earn that other 7 to 8% from some other products from you, from the relationship I have with you. And hence, you need to look at the bank, how to offer more to the bank so that your loan comes faster, loans comes easier, and loans comes at a good price. That is where you need to focus on what I call the cross-selling or ancillary businesses for the bank, which includes the cash management, which Mohammed Ali leads for his bank, trade business, the LCs and collections and exports and other businesses, and treasury businesses where we will be talking about interest rates later, the interest rates and the derivative products and foreign exchange products. So, and the more transaction we get in your account, when we see more transaction, that gives us more visibility about your company, your business model, your transactions. That gives us more comfort to do better business with you and give you larger credit facilities. How do you move your banks to lend against your character rather than your collateral? I mean, it's easy for me to speak on this platform and say bankers should lend against collateral, lend against character, but there are ways and means where you can move the bankers towards focusing more on the character than on the collaterals. How do you do that? Transparency and flow of information. banks have various ways and means to ascertain information from other sources. So we will validate the information what you give. So be transparent about what information you provide to the bank and provide it at a regular frequency, a quarterly or half-yearly, whatever you believe is good for your size of business. Bankers also put some covenants, financial covenants and information covenants in our credit facility, like minimum tangible net worth should be X, or the net debt to EBITDA should be X times. It should not exceed more than 4 times or 5 times, whatever be it. So deal with them proactively. When I say that, what I mean is, as companies, you know that you might, because of the pandemic or because of any other reason, you're going to breach those covenants by year end, by 31st December 2020 or 21. So deal with them proactively, go to the bankers, tell them there is a problem. We will be breaching these covenants by year end. And hence, and this is the way you want to address this covenant breach. These are the action as management you're going to take, and this is how you're going to address the problem. That gives us a lot of confidence because you're coming and telling us in advance rather than waiting for the actual audited balance sheet to be produced to the bankers. Repayments on time. Everybody talks about paying the loans back on time, and that gives bankers a lot of, you get a lot of credibility within the banking system. I'm again going to tell you another story. When I used to work with a French bank in Chennai, we were dealing with an American multinational, the subsidiary of American multinational, very particular about repaying the loans on time. They were having loans with several banks, 10 to 12 banks, and their main operational account was one bank. And in those days, talking about the 90s, only checks were there, electronic payments didn't surface by then. So the treasurer of the company would always make sure the check for the payment of the principal and interest is presented to the bank 2 days in advance to the operational division. And then they will call up the relationship manager and tell him that I have deposited the check to make sure the payment is there. So all this happens every quarter whenever there is a repayment was happening. One particular day, I got a call from the CFO of the company to say that, Kumar, there's a problem today. So immediately I was thinking that he's going to tell me that there is no balance in the account from which he issued the check. So the check is going to be bounced. So he's proactively informing me so that I can present the check after a day or two when they mobilize the funds. So I asked him, what's the problem? He said, Kumar, we deposited the check day before yesterday. The check is also ready to be presented by your bank. But there is a strike by the bank's unions on that particular day. So there's a likelihood of the clearinghouse getting disturbed. In those days, the clearing checks were physically presented to the other banks. So there is a likelihood of the clearinghouse getting disrupted because of the strike. So in that event, my check will not get presented and your loan will not get paid. So I just wanted to keep you posted on that. So this is a very impressive thing for a banker, I'm telling you that. Please be focused on your repayment of loans on time, if you can. If you can't, then approach the bankers in advance to say why you cannot. Now, it's my turn to become the brave banker after Dheeraj. I'm going to say here, what do we expect as bankers when we see the reporting in the audited financials? Believe me, I'm standing in front of 200 eminent chartered accountants, and as a banker, I'm telling you that what do I want to see in the balance sheet? I mean, I'm a brave guy, you must admit that. But I'm not risk averse, clearly, but I have covered my risk. That secret I will say bilaterally if anybody wants to know how I mitigated my risk of facing you all on that. So the next 2 slides are going to be, what do bankers want to see in audited financials? This will help us turn around things faster for companies. Risk assessment disclosures, we talk about the credit risk, liquidity risk, market risk, etc. We do find, okay, just to be clear, we do find some of them or most of them in some companies. In some companies, we find some of them. In some companies, we find none of them. So it's a mixed bag, what we see. So my request is, if we can provide this, it will help us to turn around credit proposals faster. The second is the management impact of the COVID, the pandemic. What is the impact? What are the repercussions? what is management plan to address that COVID impact. And subsequent events, we're talking about events after the balance sheet date, till the reporting date, any material borrowings, any other material changes, please mention that, it'll help us, rather than going to and fro with the borrower after the balance sheet is submitted. Bank borrowings details, securities offered, covenants complied with or not, and if there is a covenant not complied with, what are the remedial measures for those breaches? If there are any statutory compliance breaches, for example, are there any federal law breaches in the UAE? If the company has paid any fines, we would like to know that. And some more nice to have reporting requirements. Any legal cases filed against or by the company. Detailed aging of receivables, also talking about the disputed receivables, was anything paid after the reporting date. Contingent liabilities on and off balance sheet. IAS 24, this is a very important factor for us, the related party receivables. And also we would like to know whether they are for trade or for funding, and justification for those inter-party transactions. Collection mechanisms of receivables, whether they are backed by PDCs, LCs, SBLCs, guarantees. This information helps us to do our job better. So we're done with the relationship banking. This is a pretty topical one. The interest rate benchmark changes from LIBOR to SOFR. SOFR stands for Secured Overnight Funding Rate. The background behind this change, in 2012, there were some manipulations in the banking industry regarding the benchmark, LIBOR benchmark. That is when the central banks, along with the banking industry, decided that we should move over from the LIBOR benchmark to some other benchmark, which is more reliable, more acceptable, and that's where the SOFR came into picture. So what is the difference between a LIBOR and a SOFR? SOFR, as the name indicates, it's a secured rate. This is the rate at which banks lend to other banks based on some government security. It's like a repo rate. Hence, I call it a risk-free rate. As opposed to LIBOR, LIBOR is a unsecured lending between banks. So you would expect the LIBOR always to be higher than the SOFR because this is a secured rate and this is an unsecured rate. So that's a basic difference. How much difference, etc., I don't think this is the forum to discuss. We possibly would have another forum to discuss when we bring in some other experts from our treasury to talk about it. LIBOR is forward-looking, which means when a banker says LIBOR for 28th September, that means the banker is saying for value day after tomorrow, the 3 months LIBOR is going to be 0.3%. It's a forward-looking LIBOR quote by the banker. SOFR is a backward-looking rate, which means it is based on an actual transaction which happened yesterday or day before. SOFR, as the name suggests, secured overnight financing rate. So it's an overnight rate. So how do you use that overnight rate for your loans? If you have a 3 months loan, how can you use an overnight rate for a 3 months loan? So the overnight rates are converted into a term rate by looking backwards for the last 90 days. Every day SOFR is picked up. Because every day SOFR doesn't have a compounding effect, the rates are compounded to arrive at the 90-day SOFR. So the overnight SOFR and 90-day SOFR, there will be some difference. That difference essentially represents the compounding impact of that overnight rate. SOFR is only for US dollar, whereas LIBOR was for various currencies, dollars, GBP, Euro, Japanese yen, etc. The regional banks are behind in the curve because we don't deal with US dollar as much as a European bank or an American bank would be doing. In fact, American banks have already started dealing in SOFR, started writing their loan book in SOFR. We do, the local banks do, but far and few between. We'll talk about the timeline when LIBOR is changing to SOFR. 1st January 2022, 3 months from now, is the first key date where bankers will not do any new loans in LIBOR. 2 benchmark, which is 1 week benchmark and 2 months LIBOR benchmark, will be discontinued from 1st of January 2022. What it means is some other benchmarks will continue. What are the benchmarks which will continue? 1 month, 3 months, 6 months, and 12 months. These LIBOR will continue to exist even after 1st January 2022. Why would they exist? Because the transition date for the existing loans, if you have already taken a loan from a banking system and that loan is not going to mature till 30th June 2023, that loan is expected to continue in LIBOR till that date. So the transition of existing loans will happen to SOFR on 30th June. So what happens in the interim? The interim period, there are some fallback triggers and mechanisms agreed among the banking industry, whereby if LIBOR continues to represent the funding cost for the bank, no changes. If LIBOR becomes unrepresentative of the funding cost of the banks, then the fallback mechanism will be taken up, and the LIBOR loans will be converted into SOFR loans on that cessation date or the pre-cessation date. Okay, we talk about digitization here. This digitization is more towards the mid and the large corporates, as opposed to an individual customer or a SME customer, where we will be, actually the corporate banking digitization would lag behind the SME and the personal customers. I'll tell you the reasons why. You can, in the next 12 to 24 months, you can expect some of these initiatives from the UAE banking system. Supply chain platforms. So what does that mean, supply chain platform? What will give it to you? Suppose tomorrow you have an invoice to be discounted, completely digitized. That means you don't need to give any physical documents to the bank. Banks are working on such platforms to provide you 100% digital supply chain platform. Full account opening maintenance, yeah, in personal banking you already have. Corporate banking, the large corporate, somebody asked about the multinational corporate. Imagine a situation, how do we open a multinational corporate account through a complete digitized process? Because you have several layers of companies, one over the other in various jurisdictions. Each jurisdiction have their own legal requirements. Even to draw that organizational chart of a multinational company takes time. That's the first step towards opening the account. My advice to that gentleman who asked the question about multinational, the first thing you should do is draw the chart, organization chart of that company. The UAE subsidiary, on top of that, how many companies? What is the percentage ownership? And so on and so forth. That step is done right, the documentation follow then thereafter easily, and the account can be opened easily. So you will see, but we will lag behind personal and SME banking. Liquidity management, this is more a cash management product. Muhammad Ali would be able to talk more about this, but my job is to more talk about this as a product which is expected to come in, which will essentially give you much more than what today a cash management can give in. It will give you sweep-in facilities within the bank accounts. It will give you sweep-in facilities from other banks automatically. It will also give you what we call virtual accounts. Suppose you have 100 clients with whom you deal day in and day out. Each of these 100 clients, you don't need to maintain an individual record. Banks can open virtual accounts for you. That means your main account is the same. Each customer will be assigned one particular account number, which actually folds into the main account. That means you need to monitor only the main account, but the banks will give you MIS for the 100-odd accounts. So you have your customer ledgers from the bank straight without you having to create your own customer ledgers. Check collections. Why am I talking about check collection in a digitized world today? We are all saying bye-bye, masalama to check collections. But in this country, you know, checks are becoming really something which we are not being able to avoid for years, and it will continue for a few more years. So till that is there, we need to have check collections done in a digitized manner. How do we do that? Today, banks offer solutions whereby you just have a scanning machines, and the scanning machine take those checks and give it to the bank. What that does do is it just avoids one process where you don't need to physically send the checks or scan and fax or email the checks to the bank. What the digitized solution is going to do is you scan the check, The machine picks up all the fields, complete digitized manner, and then inputs into the bank system. That's where we are all moving to. So we talk about traditional bank, a point Ibrahim raised in the morning, traditional banks like ourselves and the fintech company. It is not us versus them. It is essentially us and them. That's how I view it. The customer expectations have gone up substantially. All of you are using now an Uber or a Careem for a ride. You are using an Amazon for purchasing. You are using very many aggregators for your car purchases, for your car rentals, for your car repairs. Everywhere aggregators are coming in, giving you technological solution. So your expectations have gone up, and automatically you would expect the same thing from the banking system. So we are talking about the open banking now. There is a lot of partnership going with the fintech companies to provide that kind of banking to all of you. The difference between a traditional bank and the new bank which is going to come, or the fintech company which is going to come, there is a lot of safety aspect, a trust aspect. We are very well regulated by the central banks of the country. So that comfort factor you have with the traditional banks, but we are not as agile or quick to market as a typical new bank or a fintech will there. So this is where the balancing of things will come in going forward. And I'm sorry for this. The more the animation, the more time it takes. Apologies for that. Okay, here we are. You enjoy the lower cost and fees thanks to the fintech and a lot of convenience. What more do I say? As I said in the beginning, the consumer banking, SME banking precedes corporate banking. We will be delayed for a reason, because the corporate banking, the large and mid-corporate banking, requires a lot of human interaction, human value addition, because of the complexities involved, where the algorithms and the machines may not do as good a job as human beings as we do. So I am protected compared to my colleagues there. I will stay in my job longer than my colleagues here, hopefully. So this is the last subject, and the next few minutes I will end my presentation. I am well on time. Thank you. We're talking about digital currencies. Here we are not talking about bitcoins or the cryptocurrencies, the unregulated cryptocurrencies. I'm talking about a trend which the governments of the respective countries will come up with their own digital currency, like a e-dollars or a e-euro, and so on and so forth, e-rupees and whatever it is. So we call that the government coins. A few countries, Bahamas is already implemented one. China has done it on a selective basis to 100,000 of its population, and they expect to go full on with the e-yuan. I think Winter Olympics 2022 is when they will be launching their currency, e-currency in full. We have El Salvador, kind of a country which had legitimized the cryptocurrencies. It's a transformational change which is going to happen to the banking industry, to the monetary system. Because of these various reasons, the unbanked people are going to have now a bank account. How? All you need is your phone, a smartphone, where you can download an application which is going to be given by a central bank. So once you have the application, you have the mobile wallet with you, where you can store your currency on your phone. The physical cash will go away. You don't need to even maintain a bank account if you choose to be, if you choose not to open an account. So you have straight away an account with the central bank of each countries. So what does that mean? It's a big difference, because if you talk about the cryptocurrencies are a decentralized way of maintaining currency. There is a distributed ledger system. Hundreds of people operate the ledger. That is the subject of blockchain. As opposed to that, the digital currencies of central bank will be centralized. Everything will be centralized to the central bank. That's the difference. It can be very disruptional in more ways than one. I will leave that for another forum. We'll talk about the pros and cons. In terms of the cons, there is an end-use, the governments can make sure the money goes to where they want it to go, right? So why am I calling it a con? Because sometimes some governments can go rogue and kind of manipulate things. That's why it's a control. Everything is controlled at one place. That's why I'm saying it's a con. Very centralized environment. The last point is, think about a cross-border payment. You want to pay somebody $50. You have a e-dollar account. You are skipping the entire banking system to remit the $50 to the person who need to receive that $50, sitting somewhere in US or sitting somewhere in Europe. You pass on that $50 at any point in time in the day without incurring any banking cost. That 50 e-dollars have been passed on within a matter of a couple of seconds by a press of a button. That's how disruption it can become. And similarly, the governments, if they want to distribute their subsidies, etc., very easy for a government to do through these e-currencies. Taxation can be tracked because the digital currency leaves a trail. Every money, when it passes through, it leaves a trail. So the government will be able to track and make sure nobody avoids taxation. So that's where, thank you, IK. Thank you, everybody, for the patient listening. I know I'm standing between you and your dinner, but happy to take questions.
Mr. Bhutia, fantastic presentation. Also very happy to see that you covered IFRS, IS 24. You specifically mentioned related parties. While you mentioned on one side, which is the due from related parties, what is normally seen is there is a due to related parties, which is especially from the owners, which is not classified as an asset, but basically it's taken, or a liability, it's taken under equity. It has to meet certain criteria of equity under IS 32, and in the US GAAP and other places, it's also referred to as quasi-equity.
Yeah.
So what is this thing? When you look at a balance sheet where the amount that's due to the owner is not classified under a liability, but it's classified under equity, how much do you take of that as, and the debt-equity ratio? What's your...
Thank you. That's a very nice question and nice value addition to the presentation. So 2 points. One, in this market, because of the legal ownership versus beneficial ownership, sometimes the owners are required to bring in funds more as loans, as you rightly say, rather than as capital. Absolutely valid point. So as bankers, what we need to do, we need to look at this as equity, quasi-equity, absolutely right. So from a leverage ratio perspective, the way bankers do it, I don't know all bankers do it. As I said, not all lenders are created equal. The way bankers need to do that is, we should have a condition in the loan agreement whereby we say this loan from the promoter is subordinated to the loan from the banking system. If that condition is met, bankers should be happy to accept that as a quasi-equity. Thank you.
Thanks for the wonderful banking summit with the galaxy of all the speakers. It was really, in these critical times in the human history, the way the banks have come about to make it more sustainable is really creditable. And all of you, all the eminent speakers have come out with, the various steps that have been taken, whether in the form of tests, the monetary policies like tests or equivalent world over, and the technological this thing as well. My question is little bit more on macro level. What has happened is any event happening, any adverse event happening, throughout the world, they are going into quantitative easing. So, that has come out as a real handmade for all the economies to tide over the crisis. Is it a legacy of, the future generations that are going to suffer due to this? What is the end game of quantitative easing? Any of the bankers can speak on this.
Yeah, that's more a question for the economist of the bank. Thank you for asking that question. It's a valid point, but I'm not sure I'll be able to address your point exactly the way you want it to be addressed. So when there is a liquidity requirement, you're right, absolutely. Governments around the world do what you call the quantitative easing to make sure the money is available more. And you also see that the interest rates keep going down as they keep doing the quantitative interesting. You have seen the interest rates, the 3 months LIBOR going down to as low as 0.3%, which also gets reflected in your EBOR because these are currencies pegged. So clearly we are seeing that happening. Governments wanting to pump in more money to support the economies. Worldwide it's happening, not just in one country. So will that continue for a longer period of time? I am not in that camp. I think the interest rates are going to emerge, going to grow higher. This is my view. But I may be in a camp where I may be in a camp with a smaller number of people, but that's my personal view.
Hi, Kumar. Thanks for the nice presentation. I have a very small question here. How you see this cryptocurrency as threat to banking system and the central bank? Because with the new fintech and the crypto exchange like Binance, Kraken, right? We don't need central bank to send money. How you see this as a threat to banking system?
It is a threat. It is a threat. It is clearly a threat. But you have to bear in mind the cryptocurrencies also come with a lot of attached risks. The risk being the anti-money laundering risk. You have heard cases where ransom money was paid in bitcoins, right? So there is a attached risk, which is why the central banks around the world and the governments around the world are looking to introduce their own digital currency just with a view to make sure that that doesn't take over the economy. Because what powers the central banks will have eventually if those cryptocurrencies going to take over, what powers they would have to control the monetary policy, to control anything at all, right? What you're controlling there is a software writing. That is what you're controlling. Can central bank control a software writing? They need to control the monetary policies. That is exactly, you're right, absolutely it's a threat, but it's a threat I will not lose sleep over because it has its own pitfalls. It is subject to frauds, it is subject to volatility. While we call it a unit of measure, you have seen how volatile Bitcoin prices have been or any other currency prices have been. It has fallen as low as 30–40%. When a particular regulator refused to give approval for one of the currencies in US to issue loans, right? They were issuing a bond for some 3% or 4% for keeping monies with such cryptocurrency. The SEC said, we are not going to give approval. So suddenly they found the value of that currency went down by 25%, right? So there are risks, pitfalls in this, but the worldwide everybody is realizing the importance of having a digital currency, and that's where we are moving to.
Thank you, sir. This is the last question. Good evening, sir. Thank you for your wonderful presentation. This question is related to interest rates volatility. Okay, when you go for a particularly very long-term loans, like we need to fix the margin. For that, we need to hedge the interest rates. So at a corporate level, we have very limited resources in terms of analytics in forecasting the interest rate. Sometimes we need to sign off IRS interest rate swaps, deals and all. So sometimes maybe we have an ongoing IRS. Maybe it's the gap between actual interest rate and IRS is too much. So we may tend to close also. Yeah, we are paying extra because of this. So what kind of resources, nobody has a crystal ball. What do you think, what kind of factors we need to consider before we fix the interest rate in terms of IRS or going for a fixed rate or floating rate? Even it's applicable for personal loans also. Even if you go for a housing loan, the bank is giving, either you can go for a fixed rate or floating rates. What do you suggest? Thank you.
Very valuable question. Is it all right if I take a little bit time to answer that question, Sundar? Okay. I need to quote an example. I'm a client of Bank of Baroda for a long time, sir. Thank you. There was a product offered by Bank of Baroda in 2013. It was a fixed deposit product with a leverage available with Bank of Baroda UAE. The deposit was kept with the Bank of Baroda Mumbai. I'm telling you, that is the best investment product I have ever invested in my life. It gave me an 18% return per annum for 3 full years in dollar terms, not in rupee terms. I haven't got, and against what risk? a risk on a bank like Bank of Baroda. So I was taking a bank risk. I was getting an 18% return per annum for 3 years. How did I manage that? Because of the leverage provided by them. And the leverage also came with, to address your point, that leverage came with, fixing of rates as well. So there were two options. You could keep the deposit rate was fixed, 4.5% or 4%, whatever it was. The loan given by Bank of Baroda UAE was a floating rate loan linked to LIBOR. So I was given a choice either to keep that floating for the entire 3-year period and run the risk of my loan interest floating and my deposit interest fixed. That risk I could have run. The other alternative Bank of Baroda offered me was to fix my loan rate as well for the next 3 years, where I would have to spare a little more than the then LIBOR because I have to do the IRS, where I needed to fix the rate to have, not run the risk of that volatility in my outflow on loan interest. Now what I did, I'm a banker, right? I'm a risk-averse banker. So I needed to manage my risk. What I did was I took two loans from Bank of Baroda. One loan I hedged, one loan I didn't. Actually, for the matter of fact, the loan I didn't hedge, I earned more money. The loan I hedged, I earned less money. That's fine, because my choice was to cover my risk for at least 50% of my portfolio. And I did what I needed to do. I have no regrets for having done that, because that's exactly what I needed to do. What would have happened to my portfolio if the LIBOR had gone from that time, say 0.5% to 3%? Then I would end up paying a rate higher than my fixed deposit rate on a large leverage portion. That would have been a big risk, right? So I need to manage my risk. The best advice I can give you, in fact, most banks do that for their own treasury management. What do? They cover 50% risk and keep the 50% risk open. So pay a little bit premium for that 50% risk so that you can have peaceful sleep. The other 50% you can play around, keeping it open. That is, I don't know if that is the advice you would like to hear, but that's a practical advice I can give you. Thank you.
Thank you very much, Mr. Kumar Muthia, for your kind address. It was an excellent presentation, and we agree that relationship is important. And you mentioned about lending against the character, which we would like to see again. Now, I would like to invite CA Sundar Nurani and CA Priyanka Gupta and our Vice Chairman, CA Anurag Chaturvedi, for presenting a memento to our guest speaker. Thank you very much. It was a great presentation. Friends, we have reached to the last part of the event, vote of thanks. So please stay here for the formal vote of thanks. And I invite Mr. Amit Khaitan. Please.
Thank you, Secretary, for the opportunity of vote of thanks. Good evening. I know that I'm the last person between you and your dinner, so I don't take much of your time. So after such a powerful, great, and fun-filled session, courtesy all by Mr. Mohammad Al Ali, and I would like to thank all the guests of honor today's event, Mr. Ibrahim Ali Al Mehri, Mr. Mohammad Al Ali, and Mr. Nishant Ranjan, for their esteemed presence. I also would like to thank both the eminent speaker of today's session, Mr. Dheeraj Kumar and Mr. Kumar Muthia. I'm sure that the knowledge and information shared by all the speakers will be useful to understand the banking sector more deeply. Further, a special thanks to our Chairman, C.A. Sundar Nurani, and Vice Chairman, C.A. Anurag Chaturvedi, for leading and guiding the ICAI Dubai chapter in such a great way in this turbulence time. Finally, our participating members, we all experience the flight journey in our life, I think multiple times, right? So you know what satisfies most to the cabin crew and the pilots? Of course, when they fly the plane with full of passengers. So in today's event, I feel like that the managing committee as cabin crew and all the speakers as pilot and co-pilot. And we were satisfied because the flight was full with the passengers. So a big thanks to all our participating members for making this flight full, this event full and successful with their esteemed presence. The only difference was that the food will be served after the landing. And it would be unfair if I don't thank our event partners, or I would say sponsors, who are always with us to support in all our events. So I will start with our principal sponsor, Tally, Lulu, Danube Homes, our platinum sponsor, UHY James, IFCO, and HLB Hamt, our media partner, Khalij Times, our banking partner, Bank of Baroda, and our institutional partner, Delhi Private Schools. Members, the festive season is also about to start soon, so the greeting of the festive season in advance and hope to celebrate with you together, as our chairman said. Until we see each other in the next exciting session, I see Amit Khetan signing off and wishing you a great evening ahead and enjoy your dinner. Stay safe and stay connected. Thank you.